Last year was a good year for us. We increased our commitment by $10 billion. We are at $42 billion. And this year, if everything goes well, we should be at $50 billion. And for the first time, we went to above $10 billion for Africa. We are invested $11.5 billion in Africa, and we will be growing. We have now close to 50% of what we are doing, which is related to climate change. So I think we are on good trajectory. And this was very important at a time where countries were facing a debt crisis and where government had to spend much more money to be able to face the crisis. It was important to mobilize more private sector investment to be able to sustain growth.
I mean, from what I'm hearing, private sector money is flowing in to Africa and emerging markets, despite the global risks and challenges that we're seeing.
It doesn't flow as much at the level that we hoped. That's why IFC was as kind of counter-cyclical approach and be able to compensate for the slowdown in FDI, foreign direct investment. But what we are seeing now is that the world is the probability of a land or the hard landing is disappearing. We have now soft landing. We have seen growth, even not the levels that we want, but we're seeing growth which was higher than what was projected last year at the same time. So we have some positive element. But let me say a little bit what we are seeing, what we are hearing when we talk to investors looking at emerging economies. There is still a high level of uncertainty due to the debt level, due also to the political situation that we are facing in some part of the world, and they're asking more and more guarantees. We have now the private sector lab that was put in place by President Ajay Banga, and where we have 20 CEOs of the largest companies. And what they're telling us is that we need more guarantee to be able to invest in emerging markets. A second thing that they are highlighted is the need to have to handle the FX, because a lot of the currencies, the local currency are often not appreciated at the right level, and they need, therefore, something to address it. The third element is the regulatory framework. Is still very uncertain for a lot of these investors.
That's a lot to get around, right?
Yeah.
And a lot to think about. I mean, one of the things that I've been seeing is the notion of not enough bankable projects. Mm-hmm. And most agencies, private sectors, companies are looking for projects north of $1 billion. That's not always possible in emerging markets. So what kind of projects are in demand right now? And is it at that $1 billion mark?
But indeed, when you talk to institutional investors, they tell you that below $1 billion is less interesting for them because the transaction costs are very high. So we need to think regionally, not anymore country by countries. Let me give you an example. If you think in Africa or in other parts of the world, when you think about transmission, electricity transmission, this is an asset which is very important, particularly when it links various countries. So looking at this type of asset and trying to move them from the balance sheet of the government and recycle them in the private sector is something that we are starting to do and discussing. And it will free a lot of resources for the government, but also give some assets which are interesting for institutional investors to invest in. Other sectors that need to be, can be attractive also, everything which is related to logistics. We know that a lot of these developing countries, emerging economies, are facing serious problems in terms of logistics, and that impede their productivity and competitiveness. And that a good case is what Dubai Port is doing in other parts of the world. This investment are those investments that we think as very important, but we need to link it to other parts of the logistics, like the railway, like the other means of transportation, to be able to bring the competitiveness that is needed to attract more investment in those countries.
I mean, looking at our theme today, because we're talking about a digital future, can we talk about a digital future in the sense of immense progress across the board when we're still worried about road infrastructure, we're worried about food production? We haven't gotten the basics right, specifically in many countries across Africa.
So digital is a good mean to address those issues, actually. If you don't have
digital... You still need the basic infrastructure.
Absolutely. You need to have electricity to be able to have a digital revolution. But once you have it and the solutions are coming up more and more in developing countries, you can leapfrog and do a lot of interesting things. And let me take the opportunity to talk about AI, because I think often we are seeing AI as something that needs to be developed in more advanced economy, and the low economy are following. But you have much more nuanced story. If BioNTech, for instance, all the AI solution was developed by a Tunisian company. A Tunisian company was the one actually we did all the work to this help to have BioNTech and to have the mRNA vaccine. It shows that there's a solution. I understand that some other African here will be talking during the summit about what is happening on the health sector. So I think that we need to work in parallel and to see how the progress made on the digital AI are feeding the solutions that we are having.
But you also need physical infrastructure for AI.
Absolutely.
You need the digital infrastructure as well.
That's why, I mean, we've been investing close to $1 billion a year on infrastructure in AI, in fiber optic, in data centers, which are important because, as we know, if we don't have those data centers in place in those countries and have the connectivity such as a fiber optic, you cannot develop really an ecosystem which is helping companies. Now we have another question, is that you have a lot of small companies in emerging economies, and the adoption of technology is much more difficult because they don't have the capital. So we need to have some solution that allow them to access at a lower price those technologies that are available for larger companies. And I think that's now an ecosystem on startups which is being developed and being able to address that challenge.
You know, and that's really important, right? We're talking about, you know, companies really interested in north of $1 billion projects, but actually it's the entrepreneurial spirit in Africa in particular that is most exciting right now. It's what to do with the small to medium-sized enterprises, how to help the startup space. Because at the end of the day, those are going to be the mega companies down the line. Those are the companies that need the investment.
Absolutely. I think that I have two messages. First, African billionaires invest in the startups world. Because actually what you are seeing is that most of the money going to the startup are coming from Silicon Valley or other part of the world. So I think that it's important that the investors, the African investors, if you talk about Africa, invest in that space. But it's also valid for the part of the world where you have still very little local capital which is going in the startups. And at the end of the day, since they are generating a lot of the wealth that we'll be seeing in the future, we will still have the movement of this wealth being created from the lower part of the world going to the richer part of the world. So that's one point. Second point, I think that there is also, we need to do a lot of sandbox regulation, because a lot of the challenges that are faced by the startups don't have the adequate rules and regulation in countries, and people are using rules of regulation which are not adapted to that ecosystem to address their problems. So we need to be much more flexible, to test much more new rule of regulations. And a good example was M-Pesa in Kenya a long time ago. At that time, if you had just taken the traditional way of regulating the financial sector, you have never had M-Pesa.
It was so revolutionary, wasn't it?
Absolutely.
In fact, the central bank at the time had woken up and said, whoa, you've got a telco company that is managing so much money is passing through.
Yep.
But my question is, what is the next M-Pesa in Africa? What is that next revolutionary, digital, transformative, creation on the continent that's really going to propel?
We are seeing some interesting idea coming, remittances.
Yeah.
You know that there is a lot of remittances in Africa, and local currency is a problem. So we are seeing now investors who are saying, I have a lot of liquidity in a place because of remittances. Instead of just using the remittances, I can use this pool of local currencies that I have in a country to have loans made in local currency and reduce the FX effect in those companies. And that is quite an interesting idea, because if you look at all the movements that you have now in remittances, this is a huge market which will allow you to give some loans to SMEs in local currency instead of them borrowing. So this is a new kind of ideas that we are seeing, and I see a lot of progress and a lot of a very nice future on that. The second one that I think we ought to to think about is agriculture and all the products that will create an ecosystem which is strong for increasing agricultural production in some part of the world. It requires more insurance, it requires solving the issue of land, but once you get it, I think, right, there is a possibility from some part of the world to play a totally different role than the roles they're currently playing in the world market of food production.
I mean, this is the thing. Africa has 65% of the world's arable land. Very little of it is actually being used for its purpose. But to actually have, you know, a viable and strong agriculture sector, you need roads, you need storage, you need electricity, but you also need money, right? You need investment. To what extent are we seeing the private sector going, you know what, I want to invest in agriculture in Africa?
The development of agriculture in all countries is really a public-private partnership. It's never one or the other. This is really a sector where you need to have that nexus very strongly. Examples, to address the issue of land tenure, you need public policy. To have the R&D, you need public policy. If you want to be able to have early adoption of technology, the role of the public sector is very important. To scale up all these, you need the private sector. So I think that the first thing, we need to have a much robust, much stronger dialogue in country and in continent between the public sector and the private sector. How many times do the public sector and the private sector meet to discuss those issues? Very rarely. So we need to create these fora so that you have a conversation and you can address specifically the constraint. Secondly, how to go beyond just financing cash crop and in countries and look at smaller type of production, local cereals, for instance, which are often forgotten, to be able to address this issue of nutrition and food security. So I think that the first step is to have a much stronger dialogue between the public and the private, and to find much more to have insurance and guarantees to be able to address the fluctuation linked to agriculture.
You know, offstage, you were telling me something really fascinating about local cereals.
Yeah.
You know, that perhaps the foodies in this room might be interested in, because if you like quinoa, there's an alternative. Do you want to advertise this, or are you worried that you might steal the production? Someone might think of growing it somewhere else. Tell me.
I'm coming from West Africa, so I'm very sensitive to that. I think that if you look at the food security issues, we haven't discussed at all the local cereal. Everything has been importing wheat to be able to address these issues. And we have a lot of cereals which are weather resistant, particularly now with the climate change, which will be an excellent way to adapt the agricultural production to the climate change. And if you take something called fonio, which is a local cereal, it has the same nutrition characteristic as quinoa. Quinoa is today at the table of everybody in the world, and fonio is not known by half of the world. This is the kind of things that we need to change and to be able to attract investment for small farmers, but also to use the supply chain and use the transformation of these, the primary transformation of this product to put them in the market where there is a big demand.
And supply Africa and then the world, and that's then control that value chain. I want to talk about perceptions of risk towards Africa. You and I have spoken about this over the years. Realistically, we've had coups on the continent over the past few years. It is worrying. We've got 19 democratic and general elections this year alone on the continent. How are investors viewing risk profile in Africa?
Yes, it's unfortunately in Africa, but also in other part of the world, when there is a political problem in part of the region, it's generalized to the whole region. I think the first thing that we need to do is to show and to explain, educate investors that we are not talking about a monolithic group of countries, that there are a lot of diversity in those countries, and some countries, and you have some leaders who were here during the summit, who explain what is happening in their countries to really take that information and use it to make the decision. We are also we are now about to release the GEMS, which are all the data available on bankruptcy, failure, repayment rate, and we will be making it public very soon. So that information will be extremely important for investors to really have quantitative element to assess the risk in each of the country. So look for it. We hope this year to be able to release the GEMS data, which are really data on failure, on reimbursement of all these kind of things that the market needs to look at and use to be able to assess the risk in those countries.
Fantastic. I've got one final, very quick, important question, though. I know that you're a jollof rice expert. For those of you that know, there are jollof rice wars playing out. Who makes the best jollof rice?
The jollof, which means the Senegalese.
The Senegalese. Well, there we go. If you want good jollof, you go to Senegal. Makta Diop. Always a pleasure, sir, to speak to you. Thank you very much.
Thanks so much. Thank you.